When Larry Ellison became the world's third most richest person, people were understandably confused. What does Oracle even do these days? I know Oracle builds databases because I worked on them for the first half of my career, and that's about it. Today we're going to figure out how Oracle made Larry Ellison recently the third richest person on Earth. So let's start with some preconceived notions. Oracle builds databases and frankly gives off IBM vibes. In other words, they used to be relevant and they're becoming less so with companies like Snowflake and OneStream displacing their legacy solutions. Revenue growth is probably stagnant. Maybe they have a couple $100 billion market cap, and they've probably underperformed over the past few decades. Well, the fact that Mr. Ellison is the third richest person in the world has to do with the recent appreciation in share price. And here you can see over the past several decades, Oracle hasn't performed that well. I mean, they've marginally outperformed the NASDAQ 100, but what's interesting about this situation is that Larry Ellison owns about 42% of Oracle since he co-founded it in 1977, so it's quite an old company. Now, founder ownership of 25% or more is rare among the world's largest public companies, and I asked Perplexity, I said, tell me which companies out there, the largest companies, have founders who have a large percentage of shares, and it listed out here some names: Zuckerberg, Bezos, and Dell. And what's interesting about that is then when you go look at the equity positions that these individuals have, at least according to that previously stated information, you see that you can read this for yourself, right? So for Ellison, Bezos, and Zuckerberg, over 95% of their wealth is tied to shares of their company. That's a really huge gamble. And then you look at Michael Dell here at a $42 billion value. He owns more than 50% of the company, but since his company isn't that large, it only represents $42 billion, and he appears to have spread his bets out elsewhere. You see that only accounts for 41% of his total wealth. Now, what I think is interesting about the Oracle situation is that, as you see here, Mr. Ellison can potentially overtake Mr. Musk in the coming years as the world's richest person. And how does he plan to do that? Well, if you look at the latest, and I'm talking just less than a week ago, the analyst day that Oracle held, they threw up these targets greater than $66 billion in revenues by 2026, and by 2029, so that's 5 years from now, over $100 billion in revenues with annual earnings per share growth of greater than 20%. So if they hit those targets, presumably, that might edge Mr. Ellison up in front of Mr. Musk. And we spent some time pouring through all the collateral that was released for this financial analyst meeting. And before we start talking about that, I wanted to state a caveat here. Don't hang on every word that management says about their company. Instead, see what you can learn from people who are clearly very successful. Founders who own a big chunk of their own firms are clearly drinking their own Kool-Aid. And understanding every iota of detail about a particular company's technology doesn't make you a better investor. You'll hear this classic 25-year-old life coach comment, you didn't do the work. Well, few people who do these deep dives have any relevant industry experience, and if you actually did the work, you'd understand the principles of risk management, in particular company-specific risk. You hear people say, well, they can't lose. Yes, they can. The proof of a company doing something great is always, at least in the disruptive growth space, is always in revenue growth. That's a proxy for market share being captured. And Mr. Ellison, you see here, probably the most remarkable thing about the presentation is this man's 80 years old. People are wondering how he does it. And he gives off a good hour of banter, and I listen to that so you don't have to. And the first question, he sort of goes off. So he talks about their clustering technology that's been around for a while, what they call real application clusters. And I can recall this back in my day. They just keep running, so you can tie together 30 Oracle servers, database servers, and you can patch them on the fly. You can, as Mr. Ellison says, take a gun and shoot holes in a couple of them. And the whole thing has redundancies, and it just keeps on running. Most of the world's most important data is in an Oracle database, according to Mr. Ellison. And we'll see later why that probably holds true. He said most people thought we were going to lose our relational database franchise, which happens to be mostly on-premise. That's very important. We're going to talk about that later. AI, he says, is hot, but databases are not, and he points to SQL being the second best relational database. I Recall working with SQL alongside of Oracle back in the day. Amazon, he references here, essentially says nobody does what Oracle does. What's the move from on-premise to cloud worth? That's a question we're going to look at, and it's a big part, I think, of Oracle's thesis. And he also says here, perhaps a jab at Snowflake. Our databases don't get hacked, and we're going to touch on Snowflake as well. So some more banter that came out of his conversation. He's talked about being very involved in automating hospitals and robotics. He says all of Siemens, although he didn't name them, but he more or less said it was Siemens, diagnostic devices are part of their IoT framework and that they're better at IoT than anybody else. He says we're very involved in molecule design for cancer therapeutics. And he also says somebody's going to be better than AI at everyone else, and there is a race on for that. And he cites this example of him and Elon Musk begging Jensen of NVIDIA for GPUs over dinner. He said essentially are saying, please take our money. They happen to be training Elon Musk's Grok, his AI LLM. And he says here, we have an autonomous database that requires no DBA. So DBA is a database administrator, and they're certainly a core part of any technology stack. Well, maybe not anymore. Here's an article, 5 reasons why autonomous database is better than Snowflake. So let's talk a little bit about the financials. And when you break those out, I took this from their most recent quarterly earnings release. They don't have investor decks to accompany that, just data. You see here 79% of the revenues come from this cloud services bucket. So not a lot of granularity there, at least granularity that's easy to map out. You see I listed some statements along the bottom there about they talk about Fusion Cloud ERP and NetSuite Cloud ERP. What's notable is their gross margins are above 70%, though they've recently declined. That's still quite high. It shows the potential for profitability. This is a $454 billion company now, a lot larger than I thought they would be. And they have $84 billion in debt, so that's quite a bit. And you'll hear various opinions about whether or not that's beneficial for any company. That's a different conversation, but they seem to be managing that. Pay attention to what the credit agencies say about someone's debt. That'll tell you a lot. So the ground truth is always revenue growth. Here you can see I've penciled in those estimates we talked about earlier, sort of spread out that growth. This is what it looks like in yellow bars. Okay, so those are their aspirations. And by fiscal 2029, 5 years from now, they expect over $100 billion in revenue, a 45% operating margin, and more than 20% growth in earnings per share. So if they actually manage to achieve that, it will be a very impressive feat. And this all comes down to people believing in this story. We're going to talk about how they plan to do that. Now, are they catching up or innovating? So that recent press release on their financials makes some statements here. I've highlighted some bits. 162 cloud data centers in operation. They talk about acres of NVIDIA GPU clusters for training large-scale AI models, so he certainly was able to twist Jensen's arm and get some more GPUs. These multi-cloud agreements with Microsoft and Google and this recently signed Amazon cloud contract are a big deal, and we're going to look at why that is. So Oracle's cloud offering, the acronym is OCI, Oracle Cloud Infrastructure, and I think Wikipedia does a good job of describing Oracle Cloud in its most holistic description. Says these services are used to build, deploy, integrate, and extend applications in the cloud. Now, this becomes rather confusing for me at least. So when we look at hyperscalers, I mean, this is no surprise. Amazon, Microsoft, and Google at the top holding the most of the market share. Look at Oracle there at 2%. Is someone using Oracle on a hyperscaler's cloud considered cloud infrastructure revenues for Oracle? So does this metric go up for them if that's the case? If it does, that certainly seems like double counting. So I just wanted to note that when we think about hyperscalers and cloud infrastructure. Now, when it comes to software as a service coming out of Oracle, it's rather remarkable. They have so many offerings. We've listed some out here, again, from Wikipedia. So human capital management, perhaps competing with Workday, enterprise resource planning, supply chain management, Internet of Things, stuff like that. In this section would also be financial operations software of the type that OneStream seems to be displacing. Now, when we think about Oracle's bread and butter, which would be their database that's been around for a very long time, here you can see 94% of the Fortune 100 run on Oracle. This net dollar retention rate of 102% shows that they're not really able to upsell very much. That's something to keep an eye on. But they have a 41% database market share, they say, which is higher than any of their competitors and certainly quite impressive. So what's going to drive that 2029 growth? Well, this is something similar to a piece we did on PTC. And we need to revisit them because it was a very interesting idea, and it is this. If you have software or some platform that's on-premise, that means it's being hosted by your clients. If you can get them to switch to your cloud offering instead of that on-premise solution, then essentially they're going to save a whole bunch of money because they don't have to manage it themselves. But most importantly, you're going to get uplift because you're going to get part of all that money that they're saving. Everybody wins, right? You may double or even 4 times, as they're talking about here, 4 times your run rate just with that move from on-premise to cloud while the client saves money. So it's compelling all the way around. And you see here they're talking about applications and infrastructure, ARR bookings to on-premise support ratio, so the amount of money they're going to gain by switching clients out. And what's even more compelling, you say, how are they going to achieve all this grand profitability, right? The 45% operating margins. Well, look at this. They talk about license and support gross profits going down when they lose that business by $1, but cloud gross profits going up by $5. Of course, because you're simply adding more clients to a cloud and those fixed costs get reduced as you scale, right? So very compelling, I think. Now, when you think about Oracle versus Snowflake, how do these two compete? Mr. Ellison in a previous presentation refers to a product called Snowflake, sort of not speaking too highly of them. He says they're 17 times faster than Snowflake at 1/3 the cost. Well, it makes me wonder, well, how is Snowflake growing so fast? Is all their growth coming from some blue ocean TAM that we're unaware of? I don't know, but some of the other comments he's made here, then the cloud showed up. He says there was an interval where we weren't available in all the clouds. Well, now they are. So he's saying, look, we made that mistake, or we had that short period of time where we weren't thinking right, and now we're thinking correctly. He says, if we are, right, this was back then, and now they are in all the clouds, then we'll be able to beat Snowflake in every way that matters, okay? So he's saying now we're ready to compete with Snowflake. Snowflake, he says, pays to be in clouds, and they don't. It's way cheaper for us, he says. We had a little bit of a hitch when the cloud showed up, but he says if we can beat Microsoft and IBM in their glory days, I promise you we can beat Snowflake. Well, remains to be seen. He says we're at least a decade ahead of them, and he speaks with clear disdain towards the company. You get some Emperor's New Clothes vibes here where you just wonder if, he believes this and everybody around him is like, well, the reality is a little bit different. I'd love to hear the opposing argument from the Snowflake folks, right? But this certainly raised some questions as we happen to be holding Snowflake. So some concluding thoughts here. The on-premise to cloud uplift story is very compelling. It's a tangible reason that they might hit those revenue growth targets. Seems more like they're playing catch-up, which is fine if they can put their foot on the revenue growth pedal now and accelerate. Could hitting these growth targets make Larry Ellison the richest man in the world? Maybe so. We'll see if that happens. But when it comes to investing in Oracle stock, there are many moving parts when you look at their revenue, so we need to try to keep things very simple. Unfortunately, investor relations seems to overwhelm rather than edify, which is a problem. But I'd love to hear some comments from subject matter experts out there, not brainwashed cheerleaders, but people who actually want to have an intelligent discussion on how Oracle and Snowflake compete. And for those of you interested in investing in data centers because you see all this data center growth, you may want to watch this video next. It's quite good. It looks at 37 different data center stocks to consider and certainly points to ones that we find more favorable. So thanks so much for taking the time to watch this video today.